that this is streaming correctly.
So we'll go through a bunch of questions at the end, right?
We will, yes, we're live and we'll have some community questions at the end. Okay, this is working correctly. Great. Well, welcome everyone. Welcome to the 4th edition of the Quarterly Founders Call. I'm Tristan Dickinson, I'm the CMO of Babylon, and I'm joined by the co-founders, Fisher Yu and David Tse. Hi guys, how are you?
Hey, good morning, Tristan.
Hi, Tristan. Hi, everyone.
Good morning, good evening. Long time no talk. Good afternoon for some people. Now today we have a bit of a packed agenda, so I'm going to be quite brief. We're going to go through some updates on Trustless Bitcoin Vaults, what we've been up to. It's been a very busy time for us over the last couple of months, and then we'll kind of set the stage and give you an expectation of what's coming up over the next couple of months. So what I'm going to do now is I'm going to screen share, and then I'm going to let David and Fisher go through these slides. This is going to go for about an hour. We'll leave 10 to 15 minutes at the end, or dependent how long the presentation takes, to go through some community questions. So let me screen share now. Okay, let's get into it.
Okay, cool.
So,
David, please.
Okay guys, great to see you again. Every 3 months we do an update. So the purpose of the community call is, we work hard, but we want to provide an update to the community, what we're up to. And very importantly, we would like to get feedback from the community, so always welcome and appreciate questions that you post to us, and we'll answer a bunch of them at the end of the meeting. All right.
Yeah. Actually, Tristan, can I share mine? Tristan?
Yes, of course.
Yeah. Actually, let me share my screen so that we share my screen. Yeah, David, please continue.
Okay, let's go on. Next slide.
Yeah. Yeah.
All right, so a quick overview of our project. We, for people who newly joined our community, we were founded more than 4 years ago in January 2022. A project was founded in a Palo Alto garage. It's the same garage, guys. Still it's the same garage. So we're still here, we're still working, but now it's extended far beyond the garage. In addition to the Palo Alto garage, we also have 22 nationalities represented in our team, distributed around the world. Our current team size is 38 folks in Europe, Asia, South America, Australia, and of course United States. So 5 continents are well represented here. We're looking forward to expanding the continents, and so if you are from a continent which is not included here, please approach us and we'll see if we can expand ourselves. Okay. So what's our goal? Now, during these 4 years, we have worked on multiple different things, but there was only a single goal. The single goal is we want to make Bitcoin, which is the OG blockchain, the first blockchain, as a chain that not only benefits itself, but back the entire crypto world, achieved through Nakamoto's original premise for Bitcoin, which is trustlessness. And so our focus has been building on trustless protocols that make Bitcoin holders productive. That is, they can use the Bitcoin to back the crypto world. So it's useful for the Bitcoiners, the Bitcoin holders, useful for the crypto world, win-win situation. And we're best known for the Bitcoin staking protocol, which we've launched in August 2024, almost 2 years ago already. And over the years, it has accumulated more than 10 billion protocol to 10 billion Bitcoin on this protocol. The largest Bitcoin built protocol ever, much larger than Lightning, much larger than any other protocols that you can think of. Today, we have over 4 billion Bitcoin worth of Bitcoin sitting on the protocol as we speak. So it has been a super successful protocol. All this would not be possible without one, our team dedication, very high level of security, Bitcoin very safe, as well as backed by our investors over the years, including A16Z, Paradigm, Polychain, HackVZ, Easy Labs, and many, many others. In fact, we have over 100 investors on our cap table. Cool. All right, Fisher, next slide. All right,
Okay.
So Bitcoin staking. Bitcoin staking is the protocol that we've launched live, but we never stop. We never stop. We keep on going, and when we finish the Bitcoin staking protocol, we start thinking, what is Bitcoin staking really? Bitcoin staking is the use of Bitcoin as a collateral to secure proof of stake blockchains. And we start thinking, wouldn't it be nice if we can build a protocol that can use Bitcoin as a collateral, not only for securing proof of stake blockchain, which is one important but only one application, but we can use it as a collateral for all DeFi applications. And that led to our current focus, which is Trustless Bitcoin protocol. And Fisher will talk about our progress in multiple directions, product, go-to-market, and I'll also mention something about R&D later on, and Fisher will also share plans about the Testnet launch, as well as baby updates. Baby, of course, is our baby, the token, and at the end we'll come back with some community Q&A. Fisher, take it from here.
Yeah, cool. Yeah, thank you so much, David, for the introduction and the context. We hope this will be useful for new community members joining us. Okay, cool. So as David mentioned, what we are currently focusing on is building our Trustless Bitcoin Vault protocol, which brings trustless and native Bitcoin collateral to on-chain finance. So why are we doing this? It's because collateral is the foundation of finance, and Bitcoin is a perfect collateral. So I will use the next 2-3 slides to explain to you why this is the case and what we are actually doing at the moment. Okay, first, why collateral is the foundation of finance? Okay, so you think about finance. One of the most basic form of finance is actually borrowing, lending, and like credit card or credit line. Okay, so for borrowing, on-chain borrowing and credit card, you actually need to provide collateral in order to borrow stablecoin, to borrow other tokens, or to get credit facility from the credit card issuer, allow you to spend. Okay, so collateral is needed for borrowing and credit card to work. Then you think about option trades where you sell covered call options. Then you actually need to collateralize the target token in order to sell covered options. Yeah, so in option trades, collateral is also required. Then you think about insurance. Okay, so when an insurance company collect premium from its customers, what can they do with their premium? They actually cannot deploy the entire premium they collected for yield. Okay, they actually have to reserve a very large, sometimes even half of the premium collected there as a reserve to prove that they are able to pay the claims in case incidents happen. So this reserve is actually also a collateral. So you can see that collateral is actually everywhere in finance. It is the foundation of finance. Okay. So then the next question is, what is the perfect collateral in the crypto world? The answer is Bitcoin. Yeah, Bitcoin is the perfect collateral. Why? First, it is among all the digital assets, it has the highest value, it is globally accepted, has huge trading volume, and relatively low volatility compared to all other tokens. And second, so people actually prefer to hold Bitcoin rather than spending it like stable coins. Okay, so people prefer to hold. And then three, while people holding, that currently actually not much the Bitcoin holders can do while holding it. This is because there's have been lacking trustless way for native Bitcoin to participate in DeFi. So yeah, any participate in DeFi is risky because you need to bridge or wrap your Bitcoin. Then Bitcoin holders rather just do nothing and just hold it and waiting for the price appreciation of Bitcoin. Okay, so all these aspects mean Bitcoin is the perfect collateral. So the most
And
avoidable.
Fisher, just
Yeah.
on that quickly. So question then in terms of its kind of usability. So you kind of highlighted some areas in terms of there are challenges with bridges, there are challenges with centralization. It goes against Bitcoin's ideology and ethos. Is it also
Yeah.
partly because maybe the market wasn't or isn't mature enough and it is slowly starting to mature, and now it's becoming
Yeah.
more institutionally adopted, so now is the perfect time?
Yeah, indeed. So, for example, in the last good point, Tristan. So, in the last 2 weeks, so our team have attended a big Bitcoin Vegas and Consensus Miami, and actually, the main topic in these two conferences are institutional adoption of crypto and capital efficiency of the digital asset they are holding. And the biggest holding, of course, is Bitcoin. So people now are starting to seek capital efficiency of Bitcoin. And uh, institutions are a little bit concerned about the risks associated with deploying their Bitcoin. So what we do is to minimize the risk as much as possible. Okay, yeah, thanks, Tristan. So Bitcoin is the perfect collateral. Then what's the best way to make this happen? So our idea is the trustless Bitcoin vote protocol that we invented late last year. Okay. So basically, we allow native Bitcoin, the Bitcoin holders, to lock their native Bitcoin on the Bitcoin chain in a self-custodial vote. Okay. Just like you open a vote in a bank, right, where you are the only one who can control it. Okay. So then the locked Bitcoin can serve as a collateral and be used in on-chain finance applications like Ethereum applications like borrowing, credit card options, insurance that I mentioned earlier. Okay. Then the key part here is with the Babylon Trustless Bitcoin Votes protocol, okay, the smart contracts on the Ethereum chain, for example, decide the destination of the locked Bitcoin, which means the settlement, the disposition of the locked Bitcoin is fully programmable by smart contract. There is no like bridge or wrapper or a centralized counterparty who make discretionary decision on where does the Bitcoin go. Okay? So this way, the whole system is fully on-chain, programmable, and cryptographically verifiable, making it trustless. And this will also allow Bitcoin holders to directly enjoy on-chain efficiency with lower fees, higher yields, 24/7 availability, all the benefits of on-chain finance.
Yeah, in fact,
And
when we were at Miami Consensus, we talked to a bunch of institutions, and this notion of a title retained is super important for institutions because institutions do not want to give away the title of the Bitcoin to a third party. And not only we are using cryptography to solve this problem in the spirit of Nakamoto, it is also very much in tune with the business needs for institutions.
Yep. Yeah. So, yeah, Babylon Trustless Bitcoin Vault protocol allow native Bitcoin holders to enjoy on-chain efficiency. Yeah, and system is end-to-end trustless and allow the Bitcoin holders to retain the title to their Bitcoin, which from like accounting, tax, and regulatory perspective is very important, as David mentioned, to the institutional Bitcoin holders. Okay, so this TBV, Trustless Bitcoin Vault protocol, is what we are focusing on right now. Okay, then but the protocol itself, it's allow Bitcoin to be native Bitcoin to be used as collateral. It is not product. Okay, so we are working on the product that can be built on top of TBV. The first base use case of Trustless Bitcoin Vault protocol is the Babylon Aave integration, where it is a native Bitcoin-backed borrowing directly from Aave v4, so that native Bitcoin holders can collateralize their Bitcoin using Babylon TBV protocol and directly borrow stable coins in WBTC or any other digital asset available on Aave, directly, and enjoy the best DeFi rates in borrowing. So this is the base use case of TBV, and this will be the first product that we are going to launch with Aave in this summer.
Now
Then-
at this point,
Yep.
when the community, when they see Aave, hey, they may start having some not that great thoughts. Okay?
Yeah.
So maybe you're thinking like, oh, what about the Kelp DAO, the Kelp DAO attack that has affected Aave? So first of all, that attack is an attack on Kelp DAO, not on Aave, but Aave is like is a side damage.
It's a victim.
Okay?
Yeah.
But I would like to
damage.
use actually that example to highlight the importance of a protocol that does not use bridging, because the attack was precisely on a layer 0 verifier, which is only one of one. And by attacking that one of one verifier, the bridge was hacked. And the point of Babylon is that there's no one of one. There's no bridge. In fact, it's infinity of infinity that you need essentially to break cryptography to be able to break Babylon. And so I think this is, a good contrast with the bridge risk. And indeed, the Aave community welcomes very much this new hub spook, Babylon spook, which is a trusted spook for Aave.
Yeah.
And just one more point on that, Fisher and David. So you kind of alluded to it in terms of the spoke, but this is really on Aave v4, right? Which allows you to have a custom spoke, and in our sense, a custom setup. So was that also a very important design consideration in terms of, there's some complexities with integration, sure, but the kind of v4 nature and the custom spoke means it's a little bit more isolated in terms of contagion or potential risk?
Yeah, Aave v4, indeed, the lending side, the lending pool side is segregated, and indeed the contingent risk will be reduced.
Yeah, so I think, Aave v3, Aave v4 sits between Aave v3 and Morpho. Morpho, everything is isolated. Lending isolated, borrow isolated. In Aave v3, everything is commingled like a hot pot. V4 solve the fragmented liquidity problem by allowing the lending side to share, but with the spoke, so that each borrow side has certain cap and different parameters, so that the whole thing is much more controlled and contained. So but anyway, David mentioned about the Kelp hack. Aave in this case is a victim of that hack. This hack has generated some concerns among Bitcoin holders. Hey, Aave is hacked. What's the impact if I use Aave with my Bitcoin? Right? So since we talked about this, I can clarify. So the only impact of this incident to Bitcoin holders, when Bitcoin holders to borrow from Aave, in this case, hypothetically, is a temporarily high borrowing interest. In the normal days, the borrowing interest is 3 to 4% per annual. In a critical 2 weeks, for 2 weeks time, the interest rate hiked to 10, 13, 14%, very briefly. And then Aave and the DeFi United contribute, and also Babylon contribute to that, to bring the liquidity on the lending side back to normal. So now the borrowing rate goes back to normal, around 4%. So yeah, the only impact to the borrower in this case is a temporarily high borrowing interest, nothing else. The collateral is safe. So in our case, the Bitcoin is safe. Okay, yeah, so borrowing, native Bitcoin backed borrowing is the base use case of TBV. Yeah, we do it with Aave. Then on top of the borrowing, there are also a few other products we are incubating with ecosystem partners, including option DEX, native Bitcoin option DEX with the Cradle team, and fixed interest borrowing with the Aegis team. Because Aave borrowing rate, as I just mentioned, is variable. So for some institution Bitcoin holders, they actually want certainty. They want fixed interest borrowing. So we are working with Aegis team to offer fixed interest borrowing product for Bitcoin holders. We are also working with some projects on credit card, native Bitcoin backed credit card, and the yield marketplace. But for these ones, we are still under NDA, so we cannot mention it for now. But it is cooking. So yeah, so this year, product-wise, the base product will be borrowing, and on top of that, there will be option DEX, fixed interest borrowing, credit card, and native Bitcoin yield products. Okay, that's on the product side. Then on the launching of the protocol and the products, first we are working closely with Aave Labs and Llama risk teams in assessing the risk of our integration and preparing for the governance proposals. So we are this is work in progress, and we are also forming distribution partners. Okay, so what do we mean by distribution partner? We are referring to hardware wallets, software wallets, MPC wallets, and custodians, which will allow Bitcoin holders to actually use us when they are interested in us. So this is what we call the distribution partners. And we are also lining up the key infrastructure partners, because our protocol is new. It involves Bitcoin chain, it involves Ethereum chain, it involves zero knowledge proofs and challenges. So we are lining up the key infra partners to set up the whole thing, like liquidators, security console, ZK challengers, etc., etc. So a lot of work is work in progress. And Dave, back to you about our
Great.
R&D and security.
So as I said, our project never stops. We keep on doing innovation, keep on doing R&D to improve our product. So you remember last quarter when we did the report, the main progress there was a breakthrough on zero knowledge proof verification on Bitcoin. A new protocol called BABE was invented last year, and that improves the off-chain cost by 1000x, 1000x. Now, in the past 3 months, we had 2 more innovation, which has a significant impact on the product we're building. First of all, when we deposit Bitcoin, the original protocol took many hours for the deposit, overnight experience. Now, in traditional finance, creating a collateral, creating a loan takes many days. So hours or even half a day is already quite great progress. But we've improved it further. And a new protocol for deposit, or what we call peg in, what a nerd would call peg in, is down to about 3 hours. And really 3 hours is limited by only because Bitcoin is slow in confirmation. So normally Bitcoin takes about 1 day, 1 hour to confirm so-called 6 block deep. And just to be sure, because our vaults potentially can carry quite a lot of value, we make it 3 hours to ensure a deep Bitcoin confirmation. And that's the only limit. So we've removed all other bottlenecks and achieved this faster peg in 3 hours. And then you'll be assured that you have a deposit from the time you started. That's the number one, that's the first progress. Number second is that in addition to off-chain costs, on-chain costs is also very important. And we have also reduced the on-chain costs by more than 3x, on-chain efficiency. And so that significantly reduces the cost of deposit and make deposit very affordable, make this protocol very affordable. And if you remember from the days of Bitcoin staking, when we launched Bitcoin staking, cap number 1, the biggest problem was the transaction fees were skyrocketing because everybody was trying to use Bitcoin staking. And so there is an example where on-chain cost is very important to a protocol, and we're happy to report a more than 3x reduction. Number 3 is that we have the capability for Bitcoin holders to delegate their borrowing power. Maybe Fisher, since you spearhead this effort, maybe you can tell the community a bit why this is an important innovation.
Yeah, sure. So the best explain is let's take a yield provider's perspective. Okay. For now, if you want to generate yield for your Bitcoin, what you do? You give your Bitcoin to a yield provider so that they play around with your Bitcoin and hopefully could generate some yield for you and then give you Bitcoin back. Okay. Now, in our case, we changed this completely. In our case, the Bitcoin is collateralized and be used as a collateral for the RV borrowing. Okay. Then you are allowed, the Bitcoin holders is allowed to delegate the borrowing power to the yield provider without giving the Bitcoin to the yield provider. So this is a day and night difference. You don't need to give your Bitcoin to the yield provider. You only say, okay, here is my Bitcoin. I allow you to at most borrow say 50K of stable coin on behalf of me and then deploy this 50K stable coin to yield products. So you never lose custody of your Bitcoin. You only delegate the borrowing power and the deployment power of the borrowed asset to the yield provider. So this way, it becomes much safer for Bitcoin holders to use yield products. Yeah. So this is the delegation feature that we recently enabled. Yeah, super powerful.
Cool. Yeah, and in addition to these R&D progress, we are now at the security auditing phase. So we have finished our R&D, We have a stable version right now, and we're doing security audits, not with one auditor, not with two auditors, but with 6 auditors, specialists on different aspects of the protocol, including cryptography, smart contract, the protocol itself. Back to you, Fisher.
Yeah. And then
just
also
quickly
like
before we, just quickly before we moved on, David, I wanted to understand. You talk about 1000x in terms of the improvement, right? And the challenge that you were able to solve with the research team was efficiently verifying ZK proofs. In the old kind of BitVM3 or garbled circle manner, how much is, what's the cost? And then what would need to be downloaded in terms of size?
Yeah, so the old garbled circuit, so the technology is based on a cryptographic concept called garbled circuit. So the old solution using garbled circuit, BitVM3 as you mentioned, you have to, for each challenger, you have to download 42 gigabytes of data, 42 gigabyte of data. And this is per deposit, per challenger. So very quickly, it adds up to terabytes of data. The setup time, which involves generating these garbled circuit, can take half a day or 1 day. Okay, so many hours. In fact, we implemented a prototype on this BitVM3, and it was so slow and it was so big that we couldn't even do sufficient testing on the system, let alone deploy it. And so the 1000x not only have efficiency in terms of cost and time, but also in terms of our operational, our development needs.
Thank you. Sorry, Fisher, please keep going.
Yeah, no worries. Yeah, so yeah, we have been doing very thorough security audits on the code level, cryptography, formal verification of the system, penetration test, and we also heavily using AI to do self-auditing and internally as well. Yeah.
Oh yes,
So,
forget AI. So in fact, we have 7
yeah.
audits. We have 7
Yeah,
audits, 6 of which are human auditing firms like Zelig or Sherlock and others, plus a very important auditor called AI auditor that we developed internally.
Yep. Okay, so that's our progress now. Timeline about testnet launch. In mid-February, we launched the private testnet, which is invite only among our ecosystem partners and infra partners. So at first it was very unstable. At first, yeah, it was because it is a very new protocol, and we received a lot of good feedback, good stuff from our partners, and have been iterating on it for the last 2 months. So yeah, it now works very well and very stable and smooth. So that's the private testnet launch. And as we are wrapping up our security audits, and yeah, we planned to launch the public testnet in the last week of May. So yeah, around 26th of May, which is 2 weeks, about 2 weeks from now. And we are also working actually with Tristan to design campaigns to invite people to actually try it out and provide feedback. Okay, so that's the testnet launch.
Just quickly before we move on to Baby, for testnet, what do you think is the most important factor? So typically there's some kind of challenges at first, as it's a new system and you test and then you try and identify, here's a bug. What do we really want community members to do for testnet, and what's the most valuable, I guess, thing that they can provide for us?
Yeah, first it's use the system in whatever way you like. Bash it and help us find bugs, like system bugs, UI bugs, And second is to share your experience with us so that we can improve the UI UX to make it much more usable over time. Yeah. So finding bugs and improving UI UX. And also, very importantly, I think this testnet is a good chance for the community to get familiar with this new concept. Yeah, we are not just launching another a classic lending. It is native Bitcoin backed lending. It involves Bitcoin chain, involves Ethereum chain. For the first time, you will need to actually connect two wallets. So it's a whole new experience. Yeah, we did our best and to make sure the whole thing works in a very straightforward way, but we anticipate that the community members could help us make it better over time. Okay, Tristan, can I move on?
Yeah, we're very excited. Looking
Yes,
forward
please.
to the public testnet launch.
It's like, yeah. Okay, baby updates. So in our last community call, we mentioned that we are working on bridging baby to Ethereum because the TBV will be launched on Ethereum. But the bridging initiative for now is paused. Yeah, given all the recent bridge-related hacks in the industry. So we are reassessing all the risks associated with bridge and try to find out a more secure solution for this. And second, very importantly, it's the baby token unlocking schedule. It's changed. So the Babylon Foundation made the unlocking or the emission much more smoother. At first, in the original plan, in April 10th, 12.5% of the locked token for investors, team members, and advisors should be unlocked, followed by 35 monthly unlocks afterwards. Yeah, which means on 10th of April, there could have been a huge unlock. So that one is removed. So instead, the Babylon Foundation decided to do 36 equal monthly unlocks starting from 10th of May, which is the last Sunday. Yeah. So there's no huge cliff in terms of baby unlocking. It's just a very smooth 36 equal monthly unlocking. Let's just get started. And then also, we saw that many community members asking about the baby tokenomics, baby utility. So here is the answer. So we are working closely with A16Z experts on our baby tokenomics redesign, given our new protocol TBV. So there are, we haven't finalized it, but there are 3 high-level directions we are exploring. First is to use baby governance to control the TBV in a decentralized way, including parameters, whitelisting, system upgrades. And then once TBV goes to mainnet and get traction, we could consider require infrastructure partners to actually stake baby in order to participate in the protocol. And last but not least, it's to use an auction-based mechanism to empower the baby token used by the protocol the fees generated using TBV. So it's not a plan like protocol fee goes buyback token and burn. That has been proved by the industry to be not effective. A more effective model that is emerging is actually so for the protocol fees to be put into an auction market so that people who hold baby token can use the baby token to bid for the fees, and the highest bidder will win the fee, and the baby bit will be burned. So this, in theory, provides a much better like market-driven mechanism for baby to decide the value of the baby token. So we are working closely with ASIC in designing the details of the mechanism. That's the baby side updates. Cool. We have about 15 minutes. Perfect timing for community Q&A.
Okay, let me
Tristan, please.
go through a few questions because you did answer, and what you mentioned, Fisher, was there's quite a few questions which is around utility and tokenomics, which you've answered really well. So I'm going to ask another question, which is more about an evolution over and above kind of the first use case. So how do you see Babylon evolving beyond just vaults? Any plans for native BTC yield products or insurance layers in the roadmap? This is more related to expanding use cases of TBB, not just for the borrowing use case.
Yep. So I'll take this one. So as we mentioned earlier in the slides, the collateral is the foundation of finance and can be used everywhere. But borrowing is actually, among all these use cases, borrowing is actually the most fundamental one and with the longest history. So for the first year, our goal is to make sure this base borrowing use case is rock solid and have a very good traction and growth. And on top of borrowing, we can already have a suite of derivative products. It's not like just borrowing. We can already have, as I mentioned, can have option decks, we can have credit card, yield products, and already. So once we prove to the world that native Bitcoin collateral backed borrowing and its derivatives works, then we can become even more aggressive and ambitious in expanding native Bitcoin collateral to other sectors of the industry, such as like insurance and not borrowing based yield opportunities. So we take it step by step.
Great answer. That also kind of dovetails into the next question. So I'm very interested to hear both of your thoughts on this, but which TBB use case could become the biggest unlock for BTC-Fi adoption over the next few years?
David and I may have different answers. David, you go, please.
As Fisher mentioned, right, I think lending is kind of the foundation of finance. So I think that would be a significant unlock. And also, as Fisher mentioned, we can build many other products on top of lending. So I think that I would bet as one of the bigger ones.
Yeah. Okay, so my answer is still along the line of lending and borrowing. So if you think about that, the ultimate form of lending and borrowing is a native Bitcoin-backed stablecoin. You think about MakerDAO, now it's called Sky, right? The stablecoin they issue is actually backed. It's actually a crypto asset backed stablecoin. But what's missing is a native Bitcoin. So eventually we wish to see a native Bitcoin backed stablecoin that can worth trillions.
Interesting. I mean, I do wonder as well in the future about RWA applicability, whether it starts to become something where if you think about the asset, you might need to have a deposit for a mortgage, maybe this is 5 or 10 years, and you might need a certain amount of fiat for that. But then you might not have that amount of fiat, but you might have 10 Bitcoin. And then there's a bit of a mismatch in terms of the asset is very valuable, but you can't use it as collateral, as an example, to back a mortgage. So I do wonder, it's quite abstract because it's quite far away, there's regulation in different components, but I do wonder how extensible this becomes in the future for real world use cases of that nature.
Yeah, sure. I can give you a concrete example of how could Bitcoin associate with RWA. It's actually through borrowing. You mentioned about mortgage, right? Now in Australia, the mortgage interest rate is 6%, 6 to 8%. So if you hold Bitcoin, then you can borrow stable coin from RWA at a rate of 3-4% and use that to repay your mortgage, so that you can save 2% for your for your cash position. So this is a concrete example. So what does it reflects is as follows. So collateralizing Bitcoin to under its liquidity in a form of stablecoin is the best way to use Bitcoin. Once you acquire stablecoin, then you can do whatever you want, including buying RWA or trading RWA. Or if one day, like RWA or other lending application allow direct borrowing, lending of RWA, then native Bitcoin holders can directly borrow RWA.
Very practical example, Fisher, thank you. I mean, Australia does struggle with interest rates, but I think that's a global challenge, right? I think there's nowhere globally that's not impacted by, increases in prices and increases from an inflationary point of view.
Yeah.
Then we have another question here, which is, beyond kind of Bitcoin committed or TVL narrative, what demand does TBV actually create for the Bitcoin ecosystem? So we have kind of discussed around this, but it is a revenue generating product.
Yeah, it's a revenue generating product, and what does it bring to Bitcoin holder is to allow Bitcoin holders to have capital efficiency and liquidity of their Bitcoin without losing the custody and title of their Bitcoin. Yeah, or in a shorter word, a safe yield for Bitcoin holders.
So I think, the thing is that on the Bitcoin chain itself, there's just very little applications for the Bitcoin holder. And so here, we are leveraging off applications that are on other blockchains like Ethereum to provide productivity to Bitcoin. But we want to do it in a trustless way. And I think that is essentially the protocol, the essence of the protocol we're building. Leveraging off other blockchains' DeFi applications, but do it trustlessly by verifying zero-knowledge proofs on Bitcoin chain.
Nice, thank you. Okay, once TBV is live, so post this public testnet, then it will go into mainnet at a certain time this year. What do you see as the biggest bottleneck for mass adoption?
Yeah, I think this question have answers from multiple aspects. I can talk from the go-to-market side. So I think one of the big blocker is the mainstream world, aka like sophisticated individuals and institutional Bitcoin holders, their hesitation against on-chain finance. All the recent DeFi hacks make people feel uncomfortable with participating in DeFi, so they kind of temporarily want to back off or at least observe the development on DeFi before they try it out. We do actually see some custodians, they say, hey, we are not going to touch DeFi for the next 6 months, and we will reevaluate the situation in 6 months time. So this to me is a big potential blocker for the mass adoption. It is not specific to Babylon. It is general crypto industry. So what we can do here to alleviate this issue, two things. One, we make sure our protocol is bulletproof, and we also only work with the most low risk and rock solid DeFi protocol in such as Aave on the most secure blockchain such as Ethereum, and we do not do any wrapping or bridging or any like high risk derivatives to make this work. And second, we actively contribute to the DeFi community, to help the DeFi go towards the institutional grade security direction. So my answer in short is industry-wide hesitation against on-chain finance is a blocker, and what we do is to make sure our system is secure, and we also contribute to the DeFi community industry to make DeFi better.
Great, because it can feel a little bit like the speed of growth outweighs the knowledge of risk in our space. We had these issues in 2021, 22, or they've been ever present for a long time. But then they
almost
kind of keep,
every year.
All the time, but then they keep reoccurring. But maybe something like this is the wake up that you do need to say risk is very serious. You know, maybe we're not banks and we allocate 10% of our budget to risk, right? Maybe that's not the right proxy. Maybe it's just in terms of processes, and then also fundamentally thinking, maybe go slow to then go fast in the future. So they're terrible events. Yeah, and then anyone that's had it happen to them knows how, that feeling you get in your stomach, it's horrible. But there is some positivity. It was great to see the industry rally around, and kind of try and support users that were affected. And then hopefully it also breeds, to your point, Fisher, a level of sophistication that is needed from institutions. Now, we've got a few minutes left, and there's two more questions, but I'm going to start with, I think, a really good question. So, what's the biggest win or lesson from the last quarter that surprised the team?
Well, we a lot of surprise on the R&D side. Maybe David, you can take this
one. So I think
cryptography is magic.
The biggest win from a R&D side is, as I mentioned, the two things, which is to reduce the on-chain cost by 3.5x, as well as reduce the deposit time. I believe the UX is very important for the success of the protocol. You mentioned earlier about mainstreaming the protocol to many people. I think a good UX is super important for that. I would say from the R&D side. From the go-to-market side, maybe I can start, and then Fisher can mention his experience as well. My experience with talking to Bitcoin holders, which are our main customers for the protocol, is that they realize that a protocol that is trustless and that they can retain custody and title is actually highly valuable compared to other alternatives such as WBTC or CBBTC wrap asset. I think that comes through rather clearly, clear and loud, talking to multiple significant, very, very significant Bitcoin holders.
Yeah, that's really encouraging. Very encouraging. So it's a very strong signal of product market fit. Strongest ever.
That's great. And then the last question, a little bit more directed at David, just due to relevance. So, David, you're at Consensus Miami last week. It is an event that seemed to kind of grow in scale in terms of a lot of people were going. What was, in a kind of brief way, what was your takeaway from Consensus? What were kind of the top three things that you thought, okay, this is very interesting, or these are my takeaways from Consensus Miami?
Yeah, I think the main takeaway for me with Consensus Miami is the institutionalization of crypto. I think definitely we see many institutions participating in Consensus Miami,
Suits and ties.
and I think that dovetails with our current launch focus, which is more on the institutional side of bringing in Bitcoin, and I think that is kind of one of the main lessons I learned. So, Tristan, you were there too. Maybe you can also share your thoughts on what you learned. And in fact, you were there even longer than me.
A very good event. I echo what you said, and I heard it from almost everyone that I spoke to. This is very institutional. Not institutional in a negative sense. It was like there's a JP Morgan booth. So I wouldn't have predicted that. I'm not sure many people would a couple of years ago. I think that was everyone's kind of biggest takeaway. Another one was didn't really feel bear market vibes. There wasn't that much of that kind of energy where it is not an easy market, that's for sure. But it didn't feel like that. It felt like there was kind of some optimism, some trying to find the right way to work together, some challenges in terms of maybe the Clarity Act needing to pass, but a lot of institutions that are very willing to jump on board. And then the last part I think was just more from a logistics and practical. Miami is and that event was it's a very well kind of place to host an event like that. It was huge. I know, David, we got lost a few times walking from one end to the other, but it was very well run, and I think Miami's a place that's very good, or very well set up for events.
The convention center looks like it takes 1 mile to walk from one end to another end.
Wow.
Very easy to get lost. It feels like there's 2 or 3 convention centers.
Hey, but the weather is amazing. So yes. All right.
They're fantastic.
I can wrap it
Fisher.
up. So
Please.
so from Consensus Miami, it is clear that crypto is entering its like second half with institutional and mainstream adoption, where actual product that can help with productivity, capital efficiency, and liquidity, will find its place. So it's not a good market for projects that only have narrative and token and nothing else, but it is actually a good time for serious projects that are building real products. And we believe Trustless and native Bitcoin Collateral will play a very important role in this chapter of the crypto industry. It is inevitable, and Babylon is building this inevitable. Babylon is inevitable.
And I think that's a great place to leave it. So thank you very much, Fisher and David, for your time today. Thank you to the community members that listened in. We really appreciate it. And we will be back within the next couple of months for another spicy update like today. So thank you, guys.
Thank you so much,
Tristan.
everyone.
Thank you, everybody.
Bye-bye.